For more now on the impact of U.S. China trade tensions on the financial services industry and what those in the industry see, we're joined by Noor Menai, who is CEO of CTBC Bank USA. Corporate and commercial clients, assets of about $126 billion. Now, the bank is on both coasts of the U.S. and at least 13 markets in Asia, headquartered in Taiwan. So we have all that to focus on, Noor, right, because your clients are really at the coalface of what's happening right now in Washington, D.C. On the one hand, we're hearing Caterpillar saying, it's fine, trade with China is not impacting our business. On the other hand, we have seen consumer companies in the last few days come out and say, this is a big deal for us. What are your clients telling you?
So any thaw in the current state of talks is going to be very welcome. There is definitely, from where we sit in, as you said, 14 countries around the Pacific Rim, there is definitely concern. There is definitely an effect on these trade tensions. Nobody is willing to say that it's going to be a lethal blow, but people are concerned. So I think the news of any breakthrough, any kind of conversation that leads to moving beyond the stalemate, moving beyond the threats, is going to be very welcome. Our clients are concerned. Our clients are looking forward to making sure that this doesn't affect their business. So they've taken some defensive positions, and I'm sure that this would be an opportunity for them to assess whether they need to bolster those defenses and look at different markets.
What are you seeing in terms of loan demand, for example, or business investment from the clients that you serve, both in the US and China?
So that's a great question, and that's really a key piece of insight for us, because we have actually not seen any let up in the demand. So we're one of the few bi-coastal lenders that looks at foreign investors, both on the commercial side and mostly on the residential side. So we've seen actually no let up. In fact, there's an increase in demand on the residential mortgage side. We've grown that business from almost a standing start to almost $1 billion. And as I said, there is the desire from Asians overseas, not just China, but certainly China, to invest in U.S. residential property, it continues unabated.
Mr. Menai, Guy Johnson in London. What impact is the Huawei case having in terms of appetite for M&A, desirability of U.S. targets? I'm just kind of wondering what impact a senior executive being arrested and obviously the issues that China and the United States have with Huawei are having.
So there's definitely concern. People are scratching their heads in Asia. You know, the narrative is a little bit different, as you could imagine, on either side. In the United States, the narrative is well laid out, whereas on the mainland and in Greater China, people are more confused and intrigued by this turn of events. So not just the Huawei case, but the recent activism by the CFIUS committee, which looks at strategic investments and the expansion of the definition of what's a strategic investment and the sectors that it could take in, it has definitely cast a pall over the enthusiasm. And we've seen that net FDI into the United States has dropped considerably, almost by 90%. So it's definitely having an effect, and I think it should be considered very, very carefully.
Out of interest, what do you think is having the bigger effect on the Chinese economy at the moment? There is a clear slowdown, but I'm wondering whether that is being caused more by the trade story or by the Chinese deleveraging story.
So that's a great question. I think it's a combination of both. It both hit around the same time. The deleveraging story, as you well know, China is a unique hybrid. It's a hybrid of a command and control plus market economy, probably a unique experiment in history. So they have the ability to turn a lot of levers at the same time that we here in Western economies find harder to do over a quicker period of time. So they have a lot of dry powder. And I think it was a testament to the meticulous way in which they manage their economy, that they saw this leveraging issue, they saw the excess debt, they saw the amount of inflation that was being built into the system, and they started deleveraging in a very meticulous manner. Around the same time, these trade issues came up, So it became a force multiplier. Having said that, a 5 to 6% long-term growth plan concatenated with these strategic initiatives around Belt and Road and around Made in China 2025, those things will lead to greater stability and I think a continued amount of growth.
Talk to us about M&A, both cross-border and domestic China M&A. Obviously, cross-border, we're seeing a lot more scrutiny. You mentioned CFIUS. Right. Does that slow down? Does it halt? And then on the other side of the coin, do we see a lot more M&A in China with the deleveraging that's being sort of, taken out on the economy by the government right now? Right.
So cross-border, there's definitely, as I said, there has been a slowdown. There's less interest, both from a central perspective from the government in China. There is less of a push to expand overseas. And then on the domestic market, this is, as I said, it's very state-controlled. So there might be consolidations in the property sector, there might be consolidations on the retail sector, but on the there's no real impetus for a lot of M&A at this point.
So you're not looking or calling for a sort of bank consolidation, for example? That wouldn't help the banking industry in China?
It may or may not. So if we look at it from the perspective of what we read about, the fact that there's a lot of undiscovered bad debt.
Yes.
So the fixing up of the balance sheets that we here in the U.S. did, for which we are lauded, and then Europe is slightly slower to do that. But China hasn't done that at all. But if you look at, once again, how the command and control works, they have all the levers of power. So they control the reserve ratios, they control the dry powder around the liquidity and around the foreign reserves that they hold. So there is no safety and soundness issue at this point, from at least a central planning perspective, to say, I have to merge these two. I have two bad banks, I have to make a good bank. There is no recognition on the ground of that fact.
Mr. Menai, there was a lot of speculation earlier on this week that the PBOC was getting ready to cut the benchmark interest rates. Are you hearing similar speculation, and how likely do you think it is?
I actually have not heard that. I wouldn't be surprised. Because, as I said, they have so many levers to pull. Certainly, interest rates as a way of stimulating the economy is one of them. The more popular mechanism that they use, obviously, is the reserve ratio, by which they release liquidity for the banks. And because the banks are under quasi-state control, they can then direct investment into strategic sectors from one sector to another virtually overnight.
When you look at the investment opportunities in China, the tech sector has bounced back really quite strongly. Is it your sense that that is sustainable? It got absolutely battered at the back end of last year. I'm just wondering whether or not your sense is, when you visit people and talk to people, that the mood is improving, and as a result of which, from an equity point of view, we are likely to see this being a pickup that lasts throughout most of this year.
Right. So once again, China is not it's not monolithic. There are regions where there's growth happening. There's regions where there is relatively less growth happening. The tech sector that we speak of is in this area that we participate in at CTBC, which is this Pearl Delta region, of which China wants Hong Kong to be considered part of that. And that's absolutely booming. That's thriving. And the tech sector makes up a very significant part of it. So we're seeing that the fundamentals around combinations, around adoption of technology, around the combinations that they could look at. So the big three there, the Tencent, the Alibaba, and some of the others, they all have strategic plans that are not in a straight line with what you would think their core business is. There are strategic combinations that they're looking at, that there are things that in expansion in near Asia and far Asia that they're looking at. America was part of the plan, but that's on hold. So I'm optimistic about the tech sector in the mainland.